Hello and welcome to a new episode of the MRC podcast. My name is Moritz Weber-Schön and today I have the pleasure to welcome Mark Aedy, Chairman of EMEA and Asia at Moelis Company, who will share some of his personal experiences gained over many years in the financial industry. Before Mark joined Moelis, he graduated from Durham and then worked at HSBC, NatWest Markets, Bankers Trust, and also ran investment banking at Merrill Lynch in EMEA, and finally joined Moelis in 2009, a global independent investment bank. In addition to his role as Managing Director and Chairman of EMEA and Asia at Moelis, he serves as a non-executive director of British Land, the FTSE 100 real estate group, and is a visiting fellow at Oxford University. Furthermore, Mark was for 7 years the Senior Independent Director at the Royal Marsden, the Cancer Hospital in London, a global leader in cancer-related drug discovery, and was also a trustee of the Halo Trust, the global demining charity operating in 28 current or former conflict zones, including Ukraine, Afghanistan, Cambodia, and Sri Lanka. Welcome, Mark. We are happy to have you on our podcast show.
Well, thank you, Morris. It's a pleasure to be on your podcast, and it's kind of you to invite me. Let me start by saying Mannheim is a very important university for us, and we've had a number of alumni who work for us at Moelis. And indeed, I think some colleagues of yours from your investment club visited our office in Frankfurt in October. So delighted to be on board. I apologize for my lack of German. I'm married to a Belgian, so speaking French is quite a big enough challenge.
So you were involved in the founding of Moelis early on and led the development of the business outside the US from the dry early days. In doing so, you joined a startup and disruptor that has achieved remarkable success. Tell us how Moelis has grown under your leadership, especially outside the US, over the last 15 years and how the advisory approach differs from that of other independent advisors.
Sure. So I joined in early 2009, and the business was only a year or 18 months old at that time, principally based in the United States. It was very exciting to join effectively a startup, Moritz. But from the very beginning, Ken Moelis, the founder, together with Jeff Rach and Navid Mamazadagan, they were committed to building a global business from the outset. And their logic, and Ken's logic in particular, was if you want to advise clients, you need access globally. To opinion formers, you need insight across multiple jurisdictions, and you need access to capital, and that's worldwide. So that's point one. We wanted to be global. We also, from the very outset, set out to provide the full range of advisory capabilities, not just M&A. And that was really from the point of view of addressing the issues clients, chief executives, the challenge he or she were facing. So we built a global business providing mergers and acquisitions, restructuring, in which we're a global market leader, debt capital markets, equity capital markets, and private funds advisory. So the full spectrum. And so Ken asked me to help build the business outside the United States. And within 3 years, we had offices in London, Frankfurt, Paris, Dubai, Mumbai, Hong Kong, and Beijing. And soon after that, Sao Paulo and Mexico. We now have 23 offices worldwide and still growing. So in answer to your question about how we're different to the many other independent firms of varying sizes, I think, first of all, we're global and have access globally. I think we're very proud about providing advice on the full range of advisory issues, M&A through capital markets, through restructuring, through the private funds advisory, frankly, with the aim of being relevant to the issues the client is facing at the time. We've developed very deep industry expertise in our verticals, and that matters to differentiate our advice. And we also have a one global profit and loss philosophy, which fosters collaboration across the globe which I think, greatly enhances the quality of advice given to clients. But, the real differentiator is the quality of our relationships with clients. We're very proud about what we've built in the last 15, 16 years and the trust that the clients have placed in us right from the beginning. And to give you a sense of what we've built, in 2014, we took the company public on the New York Stock Exchange. We currently have a market cap of $6.1 billion and have returned over $2.7 billion. So that's nearly $9 billion worth of value created since we set up the firm. But, it's been great fun, but still a hell of a lot to go for and lots of opportunities to continue our growth.
So you already elaborated on your advisory approach a little bit, but the M&A advisory business, you compete against organizations that have large balance sheets such as HSBC or Bank of America. So if somebody wants to do a deal, they might say to HSBC, can you be my advisor? But can you also lend me the money to do that specific deal? But you don't use your balance sheet in that way. So is this more an advantage or disadvantage?
Well, look, it's definitively an advantage. Our independence from any other form of product capability means that our sole focus is the provision of the correct advice. And the correct advice could be, don't do the deal. Now, I come from a background working at Merrill Lynch and the combined Bank of America, Merrill Lynch, and prior to that, Deutsche Bank and NatWest Markets, where that linkage between balance sheet, be it in fixed income or in direct lending, was perceived as an advantage. I found it a disadvantage because I found that it conflicted with the independence and the integrity of the advice that we were giving. So I have to say at Moelis, in the last 15 years, I've felt emancipated from the worries about conflicts of interest. And that's not just me thinking about it. Actually, clients think about it a lot. One of the reasons many deals get momentum is there's too much at stake for an integrated bank. There's the possibility of advice. There's the fees on the debt, there's the fees on the equity, and that can lead to sort of deal momentum when in fact the reason clients appoint advisors is actually as often as not to say don't do the deal either now or don't do it this way, do it another way, or indeed don't do it at all. So I think there is a degree of professional integrity in working for an independent firm.
Yeah, very interesting. And in your current position, you are chairman of EMEA and Asia. So what are your responsibilities in this position, and what are the long-term strategic challenges you are faced with?
So look, in many respects, Moritz, my daily responsibilities are the same as for all our 160 managing directors globally. And that's, and by the way, this is Ken's philosophy as well, just relentless focus on clients, nurturing the established relationships we have, that many of whom actually, in my case, have become friends over many years. Identifying new relationships as we try and broaden our global reach, and to share our industry insight and capabilities. We're very focused on generating relevant, thoughtful, differentiating ideas. And the reason I say relevant and differentiating is that clients tend to be very informed and very on top of things. And you should use up a chairman or chief executive or finance director's time very carefully and be sure that you're relevant and being smart. I think we're very focused on being responsive. We're in a service business, so we want to be available and quick to respond. And philosophically, we're driven by focusing on our clients' interests and not our own interests. And that's also been a privilege of being in an independent firm. And in terms of sort of challenges, opportunities, our principal ambition is to build the trust and confidence of our clients over time. Nothing more valuable in life than having the trust of someone, and I'd say that about one's personal life and one's professional life, frankly, having someone's trust and confidence. But it's particularly true in investment banking when you tend to be brought in when a client is thinking about a very important transaction or structural change or strategic move. And winning that client's trust and confidence is the ultimate prize. And look, part of that, and the final area of responsibility really is a relentless focus on attracting the best possible talent to deliver that high quality advice. And so recruiting from the best, and I mean this at intern level, analyst level, all the way to managing director level, is mission critical.
You already alluded to that, but could you briefly explain how Moelis' business model is organized and also which products and services the company offers its clients by discussing the four main business areas, in particular M&A and strategic advisory, capital structure advisory, capital markets, and finally private funds advisory?
Yeah, with pleasure. So in M&A, we do buy-side roles, acting for companies, buying companies, sell sides, mergers, very high percentage of which tend to be cross-border. We'll do it for quoted and unquoted companies globally. We work for governments around the world. Private equity is an incredibly important part of our business. We have deep relationships with the big private equity and private credit funds. We've acted for sovereign wealth funds globally. And we try and leverage that access to clients with deep industry expertise. So you'll see a series of industry verticals that we have, tech through consumer, through industrials, etc., to cover the broadest bandwidth potential client activity. And on the back of that, in M&A, it means we've done a whole range of deals around the world globally, and in Germany in particular, with clients such as SAP and Siemens. In restructuring, we tend to do full balance sheet restructuring and refinancing, often in challenging environments. It's a very complex and technical business. And we at Moelis tend to do the larger, more complicated assignments, often taking in multiple jurisdictions. So things like the Steinhoff restructuring, Hertz, the car rental company, American Airlines, a number of years ago, for example. We also provide equity and debt capital market advice. We want to be relevant across the entire balance sheet, the whole capital stack. So that's everything from equity through hybrid, through senior and junior debt and everything in between. We have advised on many companies going to the public market through IPO, and I guess we're very proud of having been the lead independent advisor on the IPO of Saudi Aramco 5 years ago, which is the world's largest ever corporate finance transaction. We then have a business aimed at the private equity and private debt community, which is, as you mentioned, private funds advisory, and that's principally raising capital for those parties. Having described it in those 4 or 5 buckets, that's not really how we look at it. We think it's all part of a broad advisory spectrum, and at different times with different clients, different capabilities will be relevant. So we don't sort of look at splitting it up as you might find in a global integrated bank.
This is also reflected in the team structure and the different positions, this integrated model.
Well, look, I think so. I mean, I'll give you an example. On a live deal we're doing at the moment, I was on a client call last week. We had 8 managing directors on the line from Asia, the Middle East, London, New York and Los Angeles, all with different capabilities. And the logic of it, Moritz, is pretty simple. If you draw on enough expertise, there's a real danger you'll come up with the right answer or the right series of answers. And I'll probably say this again to you, I've never done a deal on my own, and drawing on individuals' technical expertise just increases the likelihood of us getting the right advice.
Yes, and you also did a lot of deals for the industrials group because at Merrill Lynch you were responsible for industrials for a number of years. So, in your opinion, what are the key specifics of this special industry group?
So, look, talking about me running industrials at Merrill Lynch, it feels like a very long time ago because it was in the early 2000s. But I ran that industry team before becoming head of investment banking at Merrill for Europe, Middle East, and Africa. I think the thing about industrials is it's not really one industry group. It's multiple specific sector verticals, often actually very unrelated to each other. So I built that industrials capability in Europe almost from scratch, and it included things like aerospace defense, industrial technologies, building products, infrastructure, business services, chemicals, metals and mining, automotive. So to some extent, all old economy, but very GDP relevant. It requires a lot of investment in people to have that breadth of technical, deep expertise. And of course, being old economy, it can be very, very cyclical. And in a funny way, Moritz, actually my ability to be relevant to the industrials industry is better at Moelis than it was at Merrill. Merrill, through having a balance sheet, didn't really do restructuring, whereas here, the industrials sector goes through good times when it's probably acquiring, going public, but it also tends to have periods of pretty challenging times when some form of balance sheet refinancing, restructuring is needed. So therefore, I've got more advisory bandwidth to play with here at Moelis than I had in my previous career.
Yeah, and before you joined Merrill Lynch and also HSBC, you graduated from university like most of us. So in your many years of finance, you've probably conducted countless interviews as an employer, ranging from analysts to senior bankers and managers, and therefore seen a broad spectrum of talents. So based on your personal experience, what is the best degree to enter financial service? And what changes in hiring philosophy have you seen over the course of your whole career, especially in the city of London?
So, Moritz, I fear I started in 1979. Can you believe that? That's 45 years ago, and the world was a very different place. And look, I was competing then in a far less competitive recruitment environment, far fewer applicants for each role. And indeed, I was mainly competing against UK applicants, even though I immediately went and worked internationally in Asia at the moment I left university. And people in those days were recruited from a much broader range of academics subjects, some of which were often not business related. Now, that's a big difference compared to now. I think nowadays the environment is much, much more competitive. Applicants are across the globe, so one's competing in a global marketplace, and there are some very talented, high-achieving individuals that we're lucky enough to see. And they bring strong academic credentials from some of the best academic institutions globally, and I include Mannheim in that. And look, now the truth is the degrees tend to be directly relevant. So it's economics, business studies, econometrics, accounting, maths, computing. So perhaps a much narrower range of capabilities. And I'm also finding, in a big contrast to my time, often candidates go on to do additional, go on to further education, do a master's or whatever. And certainly that's what my children did, who are in their 30s. The truth of all this, the contrast between recruiting now, particularly at analyst level, and 1979 when I joined, is, I think we need to be honest with applicants. There are a lot of them. It's tough. Most banks now secure their full-time candidates via the intern program. At Moelis, we offer a 10-week program in the summer, including training in actually a number of our global offices around the world, providing live deal experience. The advantage of that intern program, it makes sense, you as an applicant get a very good look at us. We equally get a very good look at you. And that helps inform whether there's going to be a cultural fit. And what we are ultimately looking for is three things. One, that the people are smart, academically smart, but also intellectually curious. That's point one. Have they got the raw intellectual horsepower to assemble information quickly, distill it, focus on the key issues? Secondly, as a character, is that individual going to be collaborative? Problem solving is a team game. I mentioned I've never done a deal on my own. I'm always relying on drawing on other people's expertise and judgment to get to the right result. So collaboration, being collaborative, very important. And finally, frankly, being a decent human being. And that might sound curious, but at the heart of our business is the ability to win somebody's trust and confidence. Therefore, being smart and technically qualified is a base minimum, but the ability to convey advice, demonstrate to the client that their interests are more important than your own, to say what you think rather than what the client might want to hear, to exercise sound judgments, those are much rarer characteristics. Look, if you have all three, if you're smart, collaborative, win people's trust, you'll thrive with us. And don't forget, the clients are really smart too and very experienced. So you sort of got to be at the top of your game. And that applies whether you're an intern, an analyst, a vice president, or a managing director. It applies throughout the spectrum.
Yeah, I think that's great advice and also an interesting observation. Perhaps now we could dive a little bit deeper into technical details of your day-to-day advisory business. So could you share some insights into one or two of the most challenging cases or deals you have been involved in, the strategies employed to navigate them, and the lessons learned from that experience?
So I'm going to answer that in perhaps a slightly different way, in that I'll tell you the themes and the philosophies I've experienced over the last 45 years. I'm probably not going to refer to specific deals, and I'll tell you why that is, Moritz. It might sound curious, but we have a philosophy of confidentiality and discretion. And I feel that if I talk about specific deals, it's the client who should get the credit rather than me as the advisor. But let me tell you what I think I can say on that, because it's a very interesting question. Every deal has its own specific nuances, challenges, issues, and all have their moments of complexity, forks in the road, milestones, hiccups, or whatever. And I guess a key role of as an advisor is to help navigate them, as you indicated in your question. It's very important for the advisor to remain calm, because people can get a bit excitable during deals. And I think you also need to be calm if you're seeking to provide the best possible judgment. It's incredibly important to understand the client's ambitions for a particular deal. And also, frankly, to be sure that those are the right ambitions in the interests of the company, the shareholders, etc. And then once you've established that, I think you've got to go through a pretty rigorous appraisal for every deal, whether it happens or otherwise. Is this the right time? Is it the right valuation? Can it be done differently? Is it the right thing to do? Is not doing the deal a better strategy? Is this deal in the interest of shareholders? What are the alternatives? And look, the point is about each of these deals, and each deal has its own specific characteristics. You're weighing up all these issues, doing all the analytics thoroughly, ensuring you cover all the bases, seeking opinions from the client, from colleagues, from other advisors, lawyers, accountants, public relations, checking the governance issues, regulatory environment, political environment. And you're doing all this, and at the same time, the market environment is dynamic, it's changing, which can impact your advice on the way. And it can change not only the advice you give, but the nature of the analytics you're doing as the dynamics change. And look, I'd say to you that the market environment is more dynamic today, certainly than at any time in my career, certainly compared to 1979. And just think of the period that we have all lived through in the last 5 years. I mean, while you've been at university, global pandemic, Russian invasion into Ukraine, spike in energy prices, global inflation, interest rate changes, Gaza, Lebanon, multiple changes in political leadership, changes in political philosophy, at a time when I think we're going through a technological revolution equivalent to the Industrial Revolution 250 years ago. What I would say is, whilst advisors are often seen to speak and to deliver messages, it's incredibly important with all those dynamics around you, all those changes, that an advisor listens. I mean, it's an old story that you never learn anything when you're talking, but if you listen, it can make a material difference. And then you corral all those multiple sources of information, distill it into the core critical components to equip you to take a view on a deal, and then you've got to articulate your view on the deal to the client. Where this gets me is, why the hell have I done this job for 45 years? Yeah. And the fact is, if you do all those things right, that navigating all those issues, it's hugely stimulating to sit in the room as the clients are navigating their way through it. And you have to rely on a hell of a lot of people. And I mean this, analysts through to managing director, to get to the right conclusion. I mean, analysts must often think, why am I making a difference doing all this hard yards analytics? But that's the analytics I'm going to rely on to come to my view. So it's mission critical that it's right and accurate and well presented. And look, the truth is, it's a great privilege to sit in a boardroom with a chairman, with a CEO, as he or she is ruminating on these issues and trying to address them. Now, the other thing is, Maurice, obviously, with the passage of time over the years, you see and witness a hell of a lot of things that go right, some things that go less right. And that accumulation of wisdom and experience helps shape how you assess opportunities, what your judgment's going to be, and how you deliver the information. It doesn't mean you stop learning. I'm still learning, 45 years in.
Yeah, and finally, in your opinion, what constitutes then a successful deal, and what key performance indicators or metrics does the firm use to measure the effectiveness of its strategies and also solutions?
So, look, I think the key thing is, have you solved the problem that the client has asked you to help tackle? If the deal proceeds, obviously you want both parties, if there are multiple parties, to feel it's been handled fairly and professionally with integrity. You want the market, and I mean both the commercial market for the company involved, but also the stock market, if it's quoted to respond positively, I sort of feel that goes without saying. But for me, much more important to emphasize is successful advice does not always mean it's a deal. Often the right advice is not to proceed or wait or do it differently. And I have to say, if I've been fortunate enough to win the trust of clients over the years, it's often been as much a result of saying, don't do that deal now, or don't do it at all, or do it in a different way, as saying, go ahead. And, you've got to have the courage of your convictions. So I think my main measure, my main milestone is, have we given the right advice? Did we exercise the right judgment? And you know in your bones whether it's the right advice, whether to proceed or not to proceed. And I think you've got to have the courage to say what you think, not what the client might want to hear. And I think you've got to have the evidence to hand to support your line of thinking.
I think you made it pretty clear that client relationships are key. So what are the most important aspects of long-term client relationships and consequently winning new deals?
So look, I'll answer that technically and then I'll answer it philosophically. The technical thing is, look, a client, if he hires you for the provision of corporate finance advice, at a minimum, expects a high level of technical expertise, how to get a deal prosecuted in various jurisdictions, how to value it, what are the mechanics of getting a deal together. They quite reasonably also now expect insight into the industry, the dynamics of the industry, the key participants, but also what that means for his or her company. And they're sort of expecting differentiating and fresh insight into the company itself and the deal it's considering. I also think that when they hear your opinion, they're working on the basis that you've considered all angles, and particularly your access globally, your connectivity, how markets are going to respond. And I sort of think those are the minimum: technical expertise, industry insight, global access, to ensuring trust. And trust is the critical prize to win. It takes a long time to secure it. I mean, this applies to one's personal life. It's very easy to lose, and you must invest in relationships and nurture them. What I've found over the years is, if you have a long-standing trusting relationship professionally, it frequently translates into a friendship. The only other thing I'd say is, after 45 years of doing this, is you've got to be yourself. You've got to be authentic. There's no point in trying to pretend to be a certain type because you think that's how corporate financiers behave. You'll be seen through in a nanosecond by your colleagues, by your seniors, your juniors, but most importantly, the client will see through it. So be yourself.
So you mentioned you started your career 45 years ago, and eventually, what is the best advice you ever received in your entire professional career? So consequently, what advice would you also give students and also young professionals just beginning their career in M&A and strategic advisory along their way? And what key skills and also experience do you recommend they should focus on acquiring, also considering the current market dynamics you already mentioned?
So, look, great question. I'll tell you what the worst advice is. Not that I'm at my age a frequent user of Instagram or whatever, but you occasionally see, and it's usually film stars, famous film stars at universities, giving university presentations saying, follow your dreams. I mean, lovely idea. But, Maurice, my dreams when I was young was to play football for Chelsea or play cricket for England. And those are my dreams. But the fundamental problem with that was I wasn't good enough. So it was a bit academic. So I don't buy that advice. I quite like Denzel Washington's advice, which I heard recently, which was learn, earn, and return. So in the early part of your career, get your head down, learn as much as you can. Once you've accumulated a bit of wisdom and experience, earn as much as you can, either financially or philosophically, depending what career you choose. And then at an appropriate time in your career, recognize in life you have an obligation to give back, to return. I quite like that. And frankly, that's part of the reason I was lucky enough to sit on the board of a cancer hospital and Halo Trust, the demining charity, as part of that returning. But you asked me what best advice I had received. And I think the best advice I've received is become really expert at something. As a consequence, you become the go-to person because of your expertise. Because of that expertise, you will earn the respect of others and the admiration of others. And it's there that you can demonstrate to them, but also to yourself, that you can make a difference. And I think that does a lot for self-esteem, for personal self-confidence. And there is an enormous reward in feeling you can contribute because of that expertise. So I think becoming an expert in whatever field you eventually end up doing, being in corporate finance or anything else, being an expert is the thing that makes a difference. Allied to that, and I think critical to being an expert, is the capacity to listen. There's a real danger you learn something from someone better informed and wiser than you are if you have the capacity to listen. So become an expert and listen.
Yeah, listening is good advice because, of course, you don't start out as an expert, but that alone probably won't make you stand out. So how can you distinguish yourself as an analyst?
So that's a very important question, and we think a lot about that. So let me try and translate those hopeful words of wisdom into what it means as an intern or as an analyst, starting in investment banking, starting at Moelis Company. Get technically expert as soon as you can. Accumulate technical skills as quickly as you can, because then you can contribute, and you'll be surprised how quickly interns and analysts start contributing. And I rely as a managing director on their expertise coming from the most junior of analysts. So it really matters. Secondly, get on as many live, real transactions as possible, because that helps to start forging your judgment, giving you the bookends of what's good and less good, the right way to navigate. It increases your ability to participate with clients and to make a difference. And the third thing is always, this is going to sound mad, always stick your hand up and volunteer to work and be a positive and constructive influence around the place. And I mean that with the analysts surrounding you, the people that you work for, the associates, the vice presidents, for the managing directors, but clients will pick it up. You have positive energy, the clients will want to work with you and will respect you, even in a junior role, and it makes the thing much more fun. Collaborate. You'll learn quicker. It's more fun. I've mentioned listening. I won't say it again. And I think at points in your life, I think you should be bold and take risk. And I'll give you an example. For me, is that, I went from heading investment banking in Europe, Middle East, and Africa at Merrill Lynch, and then Bank of America, Merrill Lynch. And Ken offered me the opportunity to work in a startup, which at the time was unproven. It was making great progress with very ambitious plans. And I'm really very fortunate to have, as we say, hitched my wagon to Ken Moelis and been part of building something global and relevant. And it's been great fun on the way. So get technically expert, get on live deals, stick your hand up and volunteer, collaborate, listen, and occasionally take some measured risk.
Perfect. So now we all know how to be a great analyst. So, and based on your experience, are there any avoidable mistakes that you often see, especially analysts make? And what mistakes can you also observe among more experienced bankers that could actually be avoided?
Yeah, that's a very good question. Look, I think frankly, the filtering process of the very rigorous interview process that most leading investment banks go through means that most people who join as interns and analysts go in with their eyes open, and that's very important. I think when you're applying for investment banking, you've got to be realistic. It's a very competitive environment. As I said earlier at the beginning of our discussion, you're competing against global candidates. The upside of that is you're going to be surrounded by some very smart and talented people, and that's very stimulating. The hours are very demanding. The positive side of that is that you will learn very quickly and accumulate expertise very quickly and be well paid for it. But if you're not prepared to put those hours in and stick your hand up and volunteer, the job is not for you. Accumulate technical skills as quickly as possible. If you don't have those fundamentals, later on you'll get caught out. And it materially impacts your ability to make the right judgment if you don't have the building blocks of technical capability. Sometimes people make the mistake of when they are not quite sure what they should be doing or how to solve a problem, they don't ask. Always ask. People are keen to help. We're all got a common purpose of the right advice. And I've mentioned this before, but be yourself, be authentic. Don't try and be something else or some image of corporate financier you think is right. Be who you are, because again, your colleagues and clients will see through it if you're not. And those are the things where I think if they haven't got those things right, some investment bankers have struggled to make an impact.
Yeah, and now we have almost reached the end of our podcast interview, and I would like to ask some final questions. So it seems that you had a quite rewarding career, and when you look back on your own career, what was right and important, and what would you do differently today with all your experience you've gained?
It's a very good question. I'm not sure I look back and reminisce with any sense of sadness. I rather reflect on previous experience as a means of learning about the next important decision I need to make. But, you know, I had a place at business school in America in 1986. I chose not to take it because I was doing lots of live transactions at the time and learning a lot. And look, I think in retrospect, I missed an enormous networking opportunity. And I put it to you, Moritz, you and your friends at Mannheim, you're meeting people and you're building a series of relationships at university that will have an impact on the rest of your life. And there'll be people you're already working with, have met socially and academically, who will have a material impact on your career. So I think I missed that networking opportunity in my enthusiasm to do live deals. Now, has my career suffered over a 45-year period because of that? You and I could debate that. So it's not a big regret. I often thought I would have enjoyed being in private equity. I like long-term projects. I like evaluating strategies, assessing people, and try to marry the right people with the right strategy. But the truth is, the thing I really like most is being in the boardroom, providing advice and helping clients navigate choices, be it private equity clients or governments or corporates. And that's where my skills are best deployed. So I'm not sure I'd change too much. I think, a personal philosophical note, I think my family have put up with a lot in terms of the hours I've committed in the last 20, 30, 40 years. I'm very conscious of that now. I perhaps could have been more available. And having kids is a very valuable thing. And my wife has been a huge support in my career, and I owe her and my kids a great debt. Perhaps I might have navigated that a bit better. I'm still married to the same person, I hasten to add. Look, the truth is, Moritz, I've been very fortunate. I've had a very stimulating career, multiple countries, multiple deals, fascinating. I've had a great time at Moelis, worked with some remarkable people, learnt a lot from them, had fun. How many investment bankers in their mid-60s will tell you they've had fun? I've been very lucky. And I'm very proud of the personal long-term relationships I've forged. As I say, many of whom are now personal friends, which has just added to the fun of the job.
And looking forward, what strategies does Moelis pursue to gain an advantage over its competitors in 2025 or maybe also the next 10 years?
Well, look, I think we are unfinished business. We're still a growing company that still has the feeling of the entrepreneurial disruptor that Ken, Narvad, and Jeff started in 2007-8. I think the critical thing, lots of growth in industry capability, geographic representation, and the breadth of advisory capability we bring to the table. So lots of investment, as we've done throughout the 15, 16 years I've been here. But I think there are four things I'd focus on. One is we must continue to be relevant. We must be available to be relevant. We've got to look after existing relationships, nurture them. Those are the ones that have backed us to date, to whom we owe a great debt. But equally, we need to forge new ones as we broaden our capabilities. And at the heart of it, frankly, is recruiting and retaining the best possible talent, because that's how we'll secure business going forward. That's it, simple. Be relevant, nurture relationships, forge new ones, and recruit the best possible talent.
So, and this is the last question I asked. What role does, in particular, Germany and, of course, Mannheim play as a talent pool?
Well, look, we've had a presence in Germany since 2010, I think. So a year, 18 months after I've joined. I think it's very difficult for us to be relevant globally if we don't have a perspective on the German-speaking markets. So I include in that Austria and Switzerland. We've been very fortunate in the deal list that we've generated and the trust we've had with German clients across M&A, restructuring, capital markets advice. So we are growing our business in Germany at junior and senior level. And I'm delighted to say that in speaking to Mannheim University, we've got alumni from Mannheim. So it's a key university that we want to continue hiring talent from.
Great, and thank you very much for participating in this podcast project. We very much appreciate it. Thank you, Mark.
Well, I've enjoyed it, and thank you for the questions and the opportunity to speak to you all.